Well, quite an impressive 176 points gain from the benchmark Nifty today. Good evening, traders. Today is the 4th of October 2021, 8:51 p.m. Indian Standard Time. Let's take a quick look at how did the markets fare in today's session. Index was up impressively, 176 points, holding on to the short-term supports, all the volume profile, point of control, erstwhile price clusters, previous swing lows, all of these things kind of confluence within this zone, and this zone did manage to hold this recent correction. One thing that we should note is majority of today's gain essentially came in from the first candlestick. This is the 75-minute intraday charts of Nifty 50. We have 5 bars, out of which the majority of the gains, in fact entire gains, came in from the first 75 minutes, post which it was more of a consolidation. We had this line drawn, if you remember, a few days back, just to see how we get the breakout. So we've got the breakout and we have this short-term resistance now that the index needs to deal with. I think this right now where we are is an extremely important juncture, crucial for the Nifty, and I believe for the overall markets also. I say so because first we've seen a decent correction recently, last week. If I ignore this 18,088 kind of an opening high, if I just consider this down to the recent lows, we've got a 3% kind of a close to 2.75% correction on the Nifty. And post that, we have this bounce back. Generally, if the correction has to be larger, then these bounce backs will be short-lived, like this one. This was a bounce back which led to a follow-through movement on the downside. This is yet another bounce back, and now what? Now the million-dollar question, what? And that's why I feel that if the index manages to take out that 17,750 kind of levels, and sustain somewhere up here, I think we should be well placed to sail close to that 18K mark again. On the contrary, if tomorrow or within next 2 or 3 days, if we see that majority of today's gain, which is essentially nothing but this one candlestick, has been given away. So let's say use the low of this bar, which is 17,560, 550. If this is gone in the next 1 or 2 days, then that's not good news. That will mean that the index has lost the early gains of this week and might go further down for a retest of these lows and maybe further down. Who knows? That, of course, time will tell us. The good thing about today's move was the participation across all the sectors. On my right hand side, I have the sectoral indices, and metals, media, real estate, PSU banks, mid and small caps did phenomenally well, gap up, and it actually held after even gapping up. There was no sign of exhaustion throughout the day within the Nifty mid cap and small cap index. Pharmaceuticals gave a beautiful breakout on the upside. Metals managed a pretty decent bounce back, which is pretty impressive. Media anyways were doing okay. Energy also extends further. Reliance was one stock throughout the day which kind of supported. Bank Nifty 1% is not bad, is within the line with the Nifty. IT also odd gains here and there. So overall, it was a well-rounded gain for the markets, and so it should be able to sustain itself on the upside. As I was closely monitoring the global markets, and I've been mentioning the fact that the Dow Jones and the S&P has clearly moved into a downtrend. As we record this video tonight, S&P is down close to 1.5%, Dow Jones is down close to 400 points, and SGX is down 109 points. It's at 17,600. We'll see how we open tomorrow morning. We have the entire night of US market trades to play out. My only concern, that what I've been trying to flag off, is the US markets, the global markets have clearly have moved into a downtrend, and it's extending itself further down. We've been showing good strength. You can see SGX has been showing pretty good strength. Indian markets, Nifty also have been showing very good relative strength. It's a matter of Is it a matter of time, or we would continue to show this strength? Time will tell us. But considering this kind of a situation where we are right now, we should continue to stay bullish. There's no doubt about it. Until and unless price proves us wrong, price proves that we are in a downtrend, we should not change our bias just because the US markets have turned down. But we should be careful. If you're going for long trades, the degree of aggressiveness should come down. We cannot expect to be aggressively long throughout the year, each and every month and week and day of trading sessions. So I think this is the time where we should be a little careful. Yes, bullish bias, but a careful bullish bias. Let's see how the emerging economies and especially the Indian markets react to this kind of a global shift on the downside. So please take care of your trades. Make sure you have stop losses well placed for your derivatives trade especially, and trade well. Trade